When it comes to taxes and filing a corporation, musicians really struggle in finding good information and good experts that understand the music industry. And that is because musicians and even venues and promoters and people in the music industry kind of work in several different industries at the same time, which makes it hard for the average accountant to understand how our crazy industry works. What's going on, y'all? Today's guest is Steph Belcher. Steph is an expert in taxes and setting up businesses and all things that entrepreneurs in the music industry need to understand. And what's amazing is Steph has almost 20 years experience of working in all different sides of the music industry and with some amazing artists. So this has been a really fun conversation, a really educational. I learned a lot from this conversation, and anyone that listens to the podcast a lot, you all know I am really into this stuff. I could have talked to Steph for hours. This was so fun. Really enjoyed having her on the show, and I feel like everyone listening is going to learn a lot from this episode. And definitely check out all of the resources she has to offer. Right, she has a free guide in getting started with your taxes and so much more. You can learn more about Steph Belcher at stephbelcher.com. That's BELCHER.com. I have a link. I'll have a link to that in the video description, the podcast description, and everywhere else you can find the podcast. So before we get to the conversation with Steph, a couple of quick housekeeping things, right? Please subscribe to the podcast wherever you're listening. Subscribe to the YouTube channel. As always, leave a comment if you have any questions. Would love to engage with you in the questions. Maybe we can get Steph to answer some questions in the YouTube comments as well, or wherever you're watching the video. It's not longer just on YouTube. And also, I know we've been a little inconsistent with the podcast this year. I'm gonna try to be more and more consistent with it. Y'all notice is one of my first loves of everything that I'm doing, and just trust me that my schedule is going to change this summer, and we're going to have a whole lot more time to work on a podcast and build a team and do more for the Making It Academy. And if you want to learn about the Making It Academy, go to patreon.com/Making It Academy. We have all different amazing levels. If you can help support the show for as little as $1 a month, you can, for $10 a month, you can have access to all kinds of workshops and videos that we've done in the past. And for $20 a month, you can have access to the live workshops. And we do 2 live workshops a month. They're really, really fun. Maybe I'll release one of those very soon, so everyone can get an idea of what the live workshops are like. They're a lot of fun. We have promoters, we have artists, we have venues. It's a great opportunity to network with some people within the industry. We actually have some people already networking and working together in the Seattle, Washington area, which is really cool to see that happening, building real community over there. But anyways, enough of the housekeeping stuff. I hope you enjoy this conversation with the amazing Steph Belcher. Live the life you love. All right, we are live. I'm excited to introduce everyone to Steph Belcher. Steph, welcome to the show.
Hi, thank you so much for having me.
Yeah, so today we're going to talk taxes and accounting and small businesses. But before we get there, you've worked in the music industry. So what was your role in the music industry? And then how do you get to working in taxes and accounting?
Yeah, that's a great question. I grew up in a really musical family. So I was always playing instruments and listening to music. It was my safe space during my childhood. And I grew up very athletic. So I equate running and dancing very closely with music. It's almost a very like physical thing for me. And then when I got to college, well, I knew I wanted to work in music in high school. I started really in high school. I was on the high school newspaper. And there's this cool event that's still going on in Cleveland. It's actually at the Rock and Roll Hall of Fame now. It's called the High School Rock Off. And when I was a sophomore in college, my high school had 2 bands in it. And I got to cover the event for the school newspaper. And that was my introduction to the music business and music journalism. That was actually it must have been 1998.
Wow.
Yeah. So then I started writing for the local newspaper. And when I went to college, I intended on majoring in journalism and maybe double majoring in journalism and music. but I found this cool degree called telecommunications. And once I locked into that degree, I started to learn about media in general. So my classes were how to run a radio station, how to program a television station, when to run local commercials versus national commercials, and stuff like that. So I left college with a very broad media education, and I intended to go into radio. I interned at a couple radio stations during college, and I'm originally from Cleveland, Ohio. And I also worked on my college's concerts committee. So we brought events to campus, and we booked John Mellencamp at Assembly Hall, and Keller Williams, Matt Nathanson, Howie Day.
Some fun shows.
Yeah, the Crystal Method. That was really fun.
Nice.
Yeah, I really like dance music, electronic dance music. Yeah, and there were, dozens of shows, but in that job, we had to do a lot of hands-on grassroots marketing. So between the promo position at the radio stations that I did and the marketing experience that I got in college, I left school with the intention of doing marketing for either concert venues or radio stations. But the landscape for music was changing a lot in that time. This was 2004.
Okay.
And it took me a really long time to find a job. So I became very entrepreneurial in that time. And I called it freelancing. I didn't really have like a company or any kind of goals or anything. I was just, like gigging, basically trying to pick up whatever jobs I could. But I worked really closely with some emerging artists to manage their grassroots campaigns. And at the time, these were bands like Humphreys McGee and Zach Brown Band, Stephen Kellogg and the Sixers.
Nice.
Yeah, bands that are, have been around for a long time now, but at the time they were relatively small. And I discovered the power of communities and how communities can really build music fan bases very quickly, exponentially. Got really big into street teaming at that time. And I ended up in Chicago working for an MP3 distribution website. It was called Fresh Tracks Music. And we were competing with iTunes to get major label contracts. This was in 2006. And that was going nowhere. We were not able to get any major label contracts. They were so stubborn about allowing small websites to access their catalogs. So instead, we decided to focus on college bands. And that was really fun. I got to build a 150-person street team at 75 different colleges all around the whole country. And then anytime that one of the artists that we featured on the website would come to their campus, I would send them promo materials and promote the show. I was getting very close with whoever the marketing person was at all these different concert venues on college campuses. That was a blast. That was one of my favorite jobs. Unfortunately, the website went through a redesign and ceased to be functional, which was kind of a bummer, and also made me really appreciate the fact that every time you open up Apple Music or Spotify, it works.
Right.
Your playlists don't disappear. Your artist profiles don't disappear, because that was the kind of stuff that was happening on a regular basis. Basically every time we ran a backup, we would lose everything.
Oh, no.
Oh, man. Yeah, it was a rough time. So I got laid off from that job right as the recession was starting. And at that exact same time in my life, my dad passed away. So I took kind of a step back. And it's okay.
Tough combo. Yeah.
It was a very difficult time in my life. I was also drinking a lot, partying a lot, not taking care of myself, not being a productive member of society. It was tough.
Just for context for everyone, this is the 2008 like real estate recession, right?
Yes. So this is the end of 2007. I got laid off in December of 2007. My dad passed away in January of 2008, and I couldn't find another music job. I got some production gigs at some local venues in Chicago. I would kind of freelance around. I worked at Subterranean and Beat Kitchen and Tonic Room. I worked a little bit at, now it's called Concord Music Theater. It was called something different at the time. But yeah, so in January of 2009, I basically went on Craigslist and applied at every single job I could find. And I ended up getting called by a tax guy, a tax firm. And I remember telling my husband, we were just dating at the time, but I remember telling him, I'm not going to take this job. I'm just going to go for the interview. I don't know anything about accounting or taxes. This is crazy for me to even go on this interview. But I got there and I loved them. They were the coolest guys. It was in Boys Town in Chicago, and they were so fun. They were just amazing people. They had the most fun clients, and they brought their dogs into the office.
Fun.
Yeah. And I just fell in love with them and the atmosphere that they created in the office.
It makes a big difference to people you work with, and like enjoying the people you work with and the environment of your workplace. That makes a massive difference.
Yeah, it was so much fun. So I ended up staying there for 3 years. And in the process, I learned how to do taxes. And that surprised me. I never in a million years would have expected to. I took one accounting class in college. It wasn't on my radar at all. Up till my dad died, I had never even done my own taxes before. So it was fun and surprising. And I felt like I was really helping people. I was really giving a service to the world, and coming out of that recession, if you remember, there were a lot of foreclosures.
Mm-hmm. Oh, yeah.
And when you foreclose on a house, you get a 1099 cancellation of debt for the amount that they foreclosed. And at first, in 2008, when everybody was getting those 1099s, we thought they were going to be taxable.
Mm-hmm.
So that was a huge stressor for a lot of people, getting 1099s for $150,000, $250,000 that would have been fully taxable. Congress ended up passing a law that made them forgiven. So luckily, people were not it would have added insult to injury on top of that. But I became addicted to the level of help that I was giving people. Mm-hmm. And I stayed in tax for the next 10 years. Really, currently, I'm still doing taxes, but I'm not at a CPA firm anymore. In 2011, my husband and I had a baby, and we moved to Michigan so we could be closer to family. I started working at H&R Block, and I didn't know anybody in Michigan in the music scene except for one person. His name is Matthew. And he was really close with the guys that ended up forming Wolfpack.
Oh, cool.
So, yeah. And that was just a cool. I'm sorry, what'd you say?
I said they're amazing.
Yes. Yes.
Yeah.
So they were.
And their story's inspiring for an indie artist.
Yes, very much so. So a couple of the guys in Wolfpack, Tyler Duncan is their producer, and Theo Katzman used to be in this band called My Dear Disco. And my friend Matthew had introduced me to My Dear Disco back in, 2008, 2007, maybe. So when I moved to Michigan, I asked Matthew if any of those guys needed help with anything. And he introduced me to the whole scene. And that really opened a lot of doors for me. Michigan, being isolated, I think you can probably relate to this living in Florida. It's kind of has its own separate music scene from the rest of the world. We're like a very tight-knit community up here. Mm-hmm. So that Wolfpack family and like the Green Sky Bluegrass family, May Erlewine, Junior, we're all a really, really tight-knit community. A lot of them have since moved to LA, and so we're expanding a lot, which is really fun. But I started doing taxes at a CPA firm for a lot of friends that are in that community. And it just turned into this big thing. I just kind of became like the Michigan tax person. Mm-hmm. And I was able to make that work for me until October of 2019, when my family had grown and my responsibilities really my home responsibilities started to outweigh being able to work that hard during tax season.
Mm-hmm.
Because it's a grind.
It is, yeah.
It's like 12, 14-hour days for 3 straight months,
Mm-hmm.
and then nothing after
Yeah.
that, like
Yeah.
it ends on April 15th and you are done until like September, when everybody who's on extension wakes up and goes, oh shoot, I guess I better do my taxes now.
Yeah. Yeah. Every year I ask my accountant, like, where'd you go on vacation this last year? Because he always does these epic trips for like 3-4 months over the summer. Because as you say,
Yeah.
like after April 15th, there's nothing.
Yeah. So I started teaching.
Oh,
There
cool.
was a school that opened up in Detroit called the Detroit Institute of Music Education. It was founded by a couple of people from England, and they came to the States and they researched Austin and New Orleans and Chicago and New York, and they decided to build the school in Detroit and really tap into that Motown family that
Mm-hmm.
really still exists here. A lot of the families never left. So there's like this multi-generational bed of talent that still
Mm-hmm.
lives here. We have a really, really strong community here. So I started teaching taxes and self-employment skills at Dime. We call it Dime. And I fell in love with teaching. So when tax season became too exhausting for me to be working at a CPA firm, I was doing bookkeeping for dentists, tax returns for lawyers, which is
Mm-hmm.
really complicated because of all the money that they take in and out. I was doing bookkeeping for a big advertising agency. So I wasn't just musicians, but all of my marketing was geared toward music.
Mm-hmm.
And it just got to be a little bit too much. So actually in October of 2019, I quit the CPA firm to start my own business. I registered that business in February of 2020. Took in a whole bunch of clients. I was working with the band Goose and Joe Hertler and the Rainbow Seekers and a bunch of bands that were really flourishing at the time. And then everything stopped.
Yep.
And honestly, that pretty much brings us current. Well, no, there's more in between there, but my kids stayed home for virtual school, and it was kind of like, okay, what do I do now? How do I stay invested? Because at that point, I had put 20 years into my career, and I didn't want to lose my momentum, but I also needed to be a mom. And I also found out I was having a baby, an unexpected baby. So I had him in November of 2020. So in that meantime, I decided to keep going and keep building my own business. And I decided to keep teaching. I was hosting boot camps and workshops, and I got a certification as a financial educator. I'm a certified financial educator. And all these things kind of fed into a new podcast. So that's where I've been spending most of my time and attention since September of 2021 is when I really started to launch big into the podcast. And that is a way for me to teach in long form. I haven't really started my TikTok account yet. I was just talking to our mutual friend Izzy about my TikTok account and how I can get started on that, because, it's kind of hard for me to summarize myself in only a minute or 7 seconds as she wants me to do. But so now I am doing the podcast. I am hosting boot camps and workshops, and I have a Patreon where I'm trying to build a community of financially sound musicians who are ready to turn their music careers into something that is really financially stable for them.
That's awesome. So, one slightly selfish question: what's
Yeah, of course.
the certified financial educator? Because I teach an entertainment finance class at UCF,
cool.
and I feel like that's something I should look into.
Yeah, I actually heard about it through my college. It was like a continuing ed thing they wanted me to do. It's through the NFEC, the National Financial Educators Council. It's a pretty long course. It took me a couple months to get through it all. A lot of it is teaching you how to teach and how to diversify your teaching style to meet the needs of the students.
Mhm.
A lot of it is warming the students up to being ready to tackle their finances because it's such a emotional thing
Sure.
that somebody has to really be emotionally ready
Mhm.
to, pay off their debt or
Mhm.
start saving or whatever it is that they want to do. But I'll drop you a link.
Yeah, that'd be awesome. I'll have to check
Yeah.
that out because it seems like I'll make my course more well-rounded. So
Yeah.
I you're gonna appreciate this maybe. So
Yeah.
I in my finance class, I teach it's finance and economics from the entertainment industry perspective. But economics, I have this book by this author named Henry Hazlitt, Economics in One Lesson, who's an Austrian economist, not a Keynesian economist. So it's the very are you familiar with the different schools of economics?
Yes, I actually love economics.
Yeah, so you know what Austrian economics is. So I'm basically trying to create a bunch of little libertarians in my classroom. But anyway, so cool. Check that out. Before we get into the tax stuff, if any of my students are listening or any other people that are in college right now studying music business, the biggest thing people are always trying to figure out is when I graduate, like how do I get started in this business? And it sounded like you had a really cool path. Like you've done really interesting things. You've had amazing opportunities, and you start off with freelancing and gigging, right? What advice do you have? I feel like that's how most people start off. Like if you don't have a job coming out of college, you're gonna have to freelance and gig your way to a full-time job. Like what advice do you have on just sticking with it and finding gigs and freelance opportunities?
So my gut reaction to that question is to find people that you like working with
Mhm.
because the people make all the difference. And they will, if you like working with them and they like working with you, then you're going to share opportunities with
Mhm.
each other. I think that the strongest musical communities are when the musicians really respect each other. So you have this band giving opportunities to this band, and it's none of it's ever in a vacuum. Everybody is connected to, I think the theory is 150 people within their community that they can have close relationships with. So if you're friends with a guy who's in a band, he knows 150 people that you don't know.
Right.
And that is where that exponential growth is going to come from. So first of all, find people that you like working with and nurture those relationships. Don't only talk about music. Don't only ask them for stuff, like just go out and get coffee sometimes. Help them with painting their house or,
Mhm.
if they're going out of town, ask them if you want me to get your mail for you, like little stuff like that. But then additionally, it's to my second piece of advice for that would be to find what you're naturally good at. The thing that like your grandma's always telling you, "Oh, honey, you've always been so good at that." Or something that comes very easily to you and practice doing that a lot, 10,000
Mhm.
hours or whatever it is
Mhm.
for you. Practice that skill over and over and over again till it just comes naturally and then offer to do it for people.
Yep.
And you can do it for free sometimes. You can ask to be paid, but you really want to be an expert at like one thing.
Yep.
And for me, that is like financial management and budgeting.
Mhm.
I'm, I can go through the grocery store, pick out a bunch of items and know in my head exactly how much it's going to be when I get up to the register.
Mhm.
I didn't ask for that skill. I don't know how it happened, but like I just have a knack for numbers. And so I fought it for a long time. I fought it. I kept trying to go back into music marketing and I kept trying to do all these other things. And then I was like, okay, fine. I accept it. I'm a numbers person. Let's just lean into it and really learn Excel and really
Right.
learn QuickBooks, and that has proven to be very beneficial for me.
Mhm. And that's like one of the ways to add the most value to a team, right? So you find these people you enjoy working with, and now what is your strengths, right? Because there's no as much as people want to argue this, like there's no such thing as a well-rounded person. Like there's well-rounded teams, and
Yeah.
if you can figure out how you can contribute your strengths to that team, now you can create a well-rounded team.
Yes, exactly. I read this really great book called Traction
Mhm.
by Gino Wickman. And he developed this system called the entrepreneurial operating system. That he calls it EOS. And the EOS, it basically says when you're running a company, you can only have one operating system. You couldn't open your computer and run Linux and Windows at the same time. It has to be one or the other.
Right.
So pick one operating system. But inside that book, he talks about all these different kinds of people and basically narrowed it down to two types of people. There's visionaries and there's integrators.
Mm-hmm.
And the visionaries are the big ideas people. And they're the ones who build the relationships and have the network and, do all the kind of visionary heavy lifting. And then there's the integrators who make sure that everything gets done.
Mm-hmm.
I spent a long time thinking I was an integrator because I'm a numbers person. And so I thought, oh, well, I must be the process person. And, and then I realized that I'm actually a visionary and that I need an integrator to be on my team to help me align all of my big ideas. Once I realized that, everything got a lot easier for me. But it's also hard to find an integrator in the music business because there's a lot of visionaries.
Yeah.
So, I'm always reading a lot. I'm always learning a lot. I think that it's really important, even when you're out of school, to keep learning. Read,
Absolutely.
It's hard to read for pleasure when you're in school because you're reading for tests, but keep an eye on what kind of books you like and read a lot when you get out of school, and that'll help you. You'll gravitate toward the things that you're naturally good at.
Yep, for sure. That self-awareness that you have is so important too. I mean, sure, we might fight it, right? We might have a strength that we're really good at. It's like, no, I want to be really good at this other thing. And it's like, no, like just lean into those strengths and see where those will take you, because they could take you into some amazing paths and amazing opportunities. And and I agree with the always learning. I think that's really, really important. That's honestly, so I've started this new job back in October. I'm, it's an amazing job. Like I'm booking the coolest venue in Orlando. But it's helping me remember that the reason I fell into some of the bad habits I was in when I was in House of Blues is being a buyer, like booking shows. That's all you do. Like your entire day, you're so swamped in building offers and forecasts and answering emails and doing on phone calls. You stop learning. So anyone that's in the music industry, I want to challenge y'all to continue learning always and continue to always learn more about you, right? You change with time. And as you learn more, that changes you. I've changed a lot over the last 2 years because I got laid off and had some time to dive into some books finally again, and dive into some podcasts and everything. And it's that personal growth you make through learning, it's so important. But anyway, so a little rant.
Yeah.
So
I agree completely.
Yeah. So going into the tax stuff. So I have a lot of musicians I work with. They are completely lost when it comes to time for tax season.
Yeah.
And I guess the starter for most musicians is probably being organized, right, and having something to bring to your taxes. Do you recommend like artists do financial statements, and which financial statements should they be doing? How often should they be working on those? What is some advice there? And I like the three main ones. I think it's the blanking on the name now. It's the income statement, it's the balance sheet, and maybe the P&L. But you're the expert.
Yeah. Okay. So where can I start? The big idea behind doing your bookkeeping in the music business is that there are actually 4 different industries within your career.
Yeah.
If you're just like every other musician whose tax returns I've ever done, you're actually participating in 4 different economic spheres. And those are, number 1 is a service-based industry, and that's your concerts or your gigging. And that service-based industry means that part of it cannot exist without you being there present. So that is shows, interviews, sponsorships, brand partnerships, anything where you are the product. That's a service-based industry. That means, the word service-based means that you have to be present to do it. And then there's a product-based industry as well, and that is merchandise. Merchandise requires a separate kind of accounting because you're doing cost of goods sold, you have different profit margins, you have a lot more expenses, you have shipping, you have all kinds of things regarding those products that don't apply to your service-based industry. And then you also have asset management. Your songs are intellectual property, and intellectual property is considered an asset. Assets are taxed completely differently than service-based and product-based goods that you're selling. So when you sell a song and you get paid royalties for it, what you're actually getting is a payment for the use of a license of your asset. And that is separate as well. And then the third one is teaching. And teaching very often happens on a W-2. So if you're teaching with somebody, you might be at a school, you might be an independent contractor within a school, maybe you have your own course and maybe that's the main thing that you do. But teaching is a service-based industry as well, but I like to keep teaching separate from gigging because usually teaching is individual and gigging involves a bunch of other people. So the very first thing that I want all my students to understand is that, yes, these things are going to cross over, but when you go to put them on the tax return, they're going to end up in different places. So when you're keeping track of them, try to keep track of them separately. I've spent a lot of time and people have paid me a lot of money to sit there at a computer at a spreadsheet and break all this stuff out so that it goes on the tax return properly. And it also helps you understand where you're most profitable. Gigging, as I'm sure you know, and I would love to talk to you more about this off, maybe you can come on my podcast or something and we can talk about this. But absolutely, gigging is expensive. And touring is expensive. Concerts are expensive. Every single person that's working in that building is getting paid by somebody. Ticketing fees. There is so many expenses that go into putting on a concert. And merchandise costs money. And recording costs money. All these expenses are deductible if you are self-employed. So if you're not keeping track of all your expenses, you're paying too much in tax because you're claiming all your income that's on the record, but you're not writing off all the expenses that it took for you to get there. I have done so many tax returns where the client sat down with me and said, I got paid $1,200 for the gig and I paid out my musicians, but I don't have any record of how much I paid them. And it's like, you don't have to pay tax on that whole $1,200. You only have to pay tax on the net. So we have to subtract those. We have to subtract your bass player. We have to subtract your guitar tech. We have to subtract your lighting guy and your front of house guy, all the people that you paid. If you walked away from that $1,200 gig with $200 in your pocket, you're only paying tax on $200. But if we don't get to claim all that other stuff, then you're going to have to pay tax on the whole $1,200. So you really have to keep track of everything, and you have to keep track of everything in its own little bucket, because then when you go to put it on the tax return, it's so much easier to just go, okay, here's all my gig. Here's my gig net. Here's my merch net. Here's my royalties net. And here's what I made from teaching that's on a W-2, and I had taxes withheld from that. It makes it so much easier. So if you just open up a spreadsheet and down at the bottom in the little sheets, make one for gigs, make one for merch, make one for royalty payments, and then make one for teaching. And every time you get paid, go in and pop in how much you got paid, and then as a positive number, and then as a negative number, put in however many expenses you had. And that's it. That's all you have to do. You don't have to buy expensive bookkeeping software. You don't have to print out and comb through an entire year's of bank statements. Just every time you get paid, You could even be in a Google Sheet on your phone. Just pop in there and be like, okay, I just got paid $600 for this gig and I paid out $300 to the guy who came with me. Boom. And then at the end of it, add it all up, put it on your tax return, and then you're paying the right amount of tax.
That's so, and that's why teachers are the best people to have on podcasts, right? Because we know how to break things down in simple ways. You have so many musicians friends that they'll go to their taxes with just a regular accountant, and then they're like always frustrated because they're like, I need an accountant that understands the music industry, and that is why, because you're in so many different industries, kind of all in one in those four different industries. So many questions from all of this. So where would you put like licensing? So let's say you're getting money from licensing, would that be under royalties?
Yeah, that's a royalty payment.
Okay.
Unless you're getting paid a service-based fee for composing original music on the front end, then I would probably put that as a service-based fee. Like if you're writing something, but you're giving up the intellectual property for it, you're giving up the copyright for it, then that would be service. But if you're getting checks from ASCAP, checks from SAG-AFTRA, non-employee compensation box, it's in the royalty box. So what most people don't know is that when I go and do a tax return and I type in that payment is in, it's box B or box 2, when I put that payment's in box 2, the tax software automatically puts it on what's called the Schedule E. The Schedule E is for assets, royalty payments. That's also where like rental property payments go, because that royalty payment is a capital gain tax rate. It's not a regular income tax rate. There's a gray area in the music business that can trip a lot of people up and get people in trouble. And that is when, if you're a full-time musician, the IRS is going to ask you, what's your occupation? And if you write the word musician or independent artist or performer in that occupation, that means that your royalties are subject to self-employment tax. But the tax software that you use doesn't know that. That's something that you have to do manually. TurboTax is changing it for the first time last year. I saw one of my clients, it said, TurboTax said, should these royalty payments be subject to self-employment tax? That was the very first time I've ever seen that happen, because usually royalty payments would not be subject to self-employment tax. But as if you write the word musician as your occupation, then those royalties are part of your self-employment activity and they are subject to self-employment tax. So there's like just all these little weird tricks that pop up when you're actually doing the taxes. And so if you just keep track of everything separately, then when you go to do the taxes and you go to put all the 1099s in, it'll flow much more smoothly.
Makes sense. So so we're going to the gigging side. What all is deductible? Is anything that's related to it? So like, for, let's say on bigger tours, you have a bus, you have a truck, you have gear you probably rented, you have gas, you have hotels, flights, you're probably taking people out to meals, maybe you're going out for drinks after shows. Is all of that, anything that's related while you're on the road, tax deductible?
Yes, all of that would be deductible.
Okay.
That it's anything that's considered an ordinary and necessary expense in order for you to do your job.
Got it.
If you would not buy the thing normally, you have to buy it for work, then it's a deductible expense.
Okay.
All software, your website, if you use gig software, if you use management software, all that stuff's all deductible. I actually, if I could do a little plug, I actually have a guide on my website. If you go to StephBelcher.com, I have a little button. It says download the free guide. And that is a tax deduction list. CPA approved. Everything on there is already on the tax return in one category or another as deductible. It's like education. if you're taking courses, if you're hiring coaches, if you're taking lessons, instrument lessons, voice lessons, that's all deductible. All of your wires and cables and amps and your instruments, those are all deductible. Those are technically considered asset. A lot of times your instruments are considered assets, and they're going to go in a different section of the tax return, but your software will walk you through that. And everything's deductible. Actually, for 2021 and 2022, meals at restaurants are 100% deductible when they used to only be 50%. Yeah, that's the government's way of encouraging us to go back out to restaurants.
Yeah.
So you can take people out to meals, you can throw parties, you can travel, all hotels, Airbnb. The gray area comes when, say, you have a gig in Hawaii and the gig is on a Saturday and you stay for a week and vacation. Only that Saturday is deductible. So you want to take a percentage of, if something is mixed, personal and business, you want to make sure you take a percentage of that and not try to take the whole thing. But inside the IRS's computers, they have like limits and ranges. Ranges is the word I was looking for. They have ranges of what a normal deduction is for your industry.
Got it.
Whatever your industry is. And so if you fall far above the average, you might get a letter in the mail that says, we need more information about this deduction that you claimed. And they won't necessarily say why, because it's like an automated letter.
Right.
But I've seen those before.
So, because a couple kind of, I guess, seems like simple questions, but so the percentage of tax that you pay, it's based on your net, right? So if you take all the categories, you subtract all your expenses, then whatever the net number is, you pay a percentage of tax on that number.
Correct.
So for musicians, don't just go out for drinks or for food because it's going to bring your net down, right? You're wanting your net to be still as high, I'm assuming as high as possible, because you want to have a profitable business. So don't just go out and spend money because you think you're going to pay less taxes. Yeah, you're paying less taxes because your net is lower. Is that understanding right?
Yeah. So I actually have a really good story about this. I had a client one time who didn't want to pay any tax. So he wrote everything off. And he claimed a very low amount on his tax return year after year after year. And it was the kind of thing where it wasn't entirely accurate or ethical. He was definitely scraping for deductions, is the phrase I like to use. And then he tried to get a mortgage. It was time to buy a house, and he tried to get a mortgage, and he showed them his last 3 years of tax returns, and they said, you don't make any money.
Yeah.
They were like, why are we going to give you a mortgage? You can't pay it back. You're spending all the money that you earn. And he's like, well, I made $120,000. And they're like, but your net is $12,000 and we're not giving you a mortgage. So I want everybody to, one thing I really want you to take away from this is to have a future goal in mind. And if that future goal is to buy a house or to buy an RV or to hire a team, get investors, have partners, then you want to show not only an accurate tax return, but you want to show business growth. Year over year, you want to show that not only are you earning more money, but you're spending less money. Because as you get more efficient in your business building, the percentage of your deductions should go down. Because, like, for example, if you only buy 100 t-shirts, you're going to pay more per t-shirt. And then as your business grows, you're buying 500 t-shirts or 5,000 t-shirts, and you're paying less per t-shirt, even though you're spending more. And you also want to, gradually bump the price of those t-shirts up $2 or $3 a year, just to cover the cost of inflation. And inflation's out of control right now, but that's another story for another day. But you want to show that you are making more, spending less, and saving it and investing it. And there's all these different tax strategies of ways that you can save your money there's other ways to save on tax besides just spending it all. Like you can, if you pay off your student loans, if you pay a lot in interest, you can deduct that. If you contribute to a retirement account, if you finally get health insurance, that's deductible. There's all these different things that you can do. If you want to go back to school and get a degree, there's education credits. If you have kids, there's child tax credits. There's a bunch of different ways to make your tax bill lower besides just burning through all your money.
So I guess, okay, talk about you making your tax bill low. So let's say you have done your taxes and you did all your deductions, and when it's all said and done, you have $100,000 net, right? And you're going to pay some kind of percentage on that net. Maybe it varies based on what the income streams are. But is there a way, so let's say for easy math, let's say it's 30%. Is there a way to pay less tax of that 30%? Like, could you donate money to charity, and now instead of maybe 10% of your money is going to charity and 20% is going to taxes? I guess their way to give less money to the government.
Yeah. Yes. I subscribe to the ideology that you should give the smallest amount of money to the government that you can legally get away with.
Yep.
The important word being legally.
Yep. I have a small rant on that.
Yeah.
So I always say, because yes, I'm going to try to figure out how to give less money to the government. And this is my opinion. This doesn't mean that it's a Steph's opinion, but people always say sometimes, well, if you're not giving money to the government, you're not contributing to the greater good, right? And it's like, yeah, but also don't want to contribute to war or whatever, like all the other bad things they do. So I would rather take my money and give it to charity, right? So people that say we should pay taxes because it gives people, it helps others. It's like, I always feel like those are non-charitable people that do that, because I give my money to the government and I still contribute to charity. And I'd rather give more money to charity than giving it to the government. But anyways, that's my rant.
Yeah. We should start a political podcast and really
ruffle
some feathers.
That'd be awesome.
But so I believe very strongly in local government.
Yes.
And the way the government works is that there's local, state, and federal. For the most part, I don't really want the federal government messing with my life all that much. They don't know me. They are providing some goods and services to me, and I do really appreciate them in general. But the one that's important to me is the city that I live in, the county that I live in, and the state that I live in. Because those are the services that I receive directly. My local government keeps the lights on, keeps the streets plowed, keeps the schools open. So that's where I like to submit my focus and attention, is on that local government. And yeah, I like to keep, I belong to a credit union instead of a big bank, because I know that my credit union is investing in they're investing my money in my savings account in the local community. So I think that as far as capitalistic societies go, ours is in a state of flux. Where this is a very polarizing time to be talking about politics in general. But I really like to focus on what's going on at the local level. Go to your city. If you really care, go to your city council meetings, because there are decisions being made there that directly affect you. The stuff that the president's doing and the stuff that the Congress is doing, it's important in the big picture, but almost every social movement starts locally. The very first same-sex marriages happened in the city of San Francisco, because the city of San Francisco said, yes, we will do this. And if they hadn't done that, then the state of California wouldn't have seen the benefit of it. The first decriminalization of marijuana happened at the city level. And then other cities did it. And then a bunch of cities did it. And then the state said, well, I guess we need to do this too. And that's really where it all starts. And that's a great analogy, honestly, for your music too, because starting to grow nationally is going to be a really tough grind for you. But if you start locally, and if you're not happy with your local community, move. Or go on Twitch and start a community that way, but it's that same kind of idea where like these big ideas start in very small rooms and they grow exponentially from there.
I love how you break that down. I mean, yeah, I mean, 'cause we focus so much on national news. Like the senators are doing this, the president's doing this, Congress is doing this. Like, do you know what your local city is doing that you may
Yeah.
have not no idea about and it's going to affect your life tomorrow?
Yeah.
Or you want to get into homesteading and you want to get chickens, and all of a sudden you find out that you can't have chickens in your backyard. That's
Yeah.
illegal. Like
Yeah.
that's going to affect your life way more. So I love how you break that down.
And every congressman started locally.
Yeah.
Every single one, they had to. That's the way it works. And so,
Mhm.
you start as a state rep, and then you move into state Congress, and then you move into, maybe you run for governor or you become a US senator. But it's this very slow, gradual process of moving up through the local ranks,
Mhm.
local, state, national. And we tend to really, look at these big picture national stuff, and is so much attention is spent there.
Mhm.
And then on the local level, there's people running, and you're not going to those elections in May and August and February. There's elections every single 3 months.
Yeah.
And people don't show up for them. And then they're like, how the hell did this guy get elected to Congress? It's like, well, because you let him get elected as a state rep because you
Right.
didn't show up.
Yeah. Mhm. It's so I'll bring it back to taxes in a second, but
Yeah.
the thing that drives, I mean, it's awesome to see, but it also drives me nuts, right? So like as polarized as the world is right now, you see these average everyday people stepping up and they're saying, I'm running for Congress because I want to change the school system in my city, in my
Yeah.
state. And it's like, then why aren't you running for city council or
Yeah.
for state
School
rep? Like,
board.
yeah, or school board. Like, don't
Yeah.
run for Congress. Like, you're gonna make a
Yeah.
much bigger difference locally. And the Congress should be making those rules. But anyways, going back to taxes.
Yeah.
One of the main taxes we pay, right? So thinking local, state, federal, the sales tax we pay, of course, that's partially local. Probably some part of that goes to the state, but the federal income tax we pay, like so, like Florida has no state income tax, which is awesome, but we
Yeah.
still pay federal income tax. Is there a way to pay less money to the federal government?
Yes. So that would be through your deductions, your expenditures, your investments. That's all the stuff that's on the 1040 form.
Mhm.
And that's the big picture stuff that we're talking about.
Mhm.
If you like, oh, actually, there was one thing I wanted to come back to.
Mhm.
You said $100,000 as your net. And
Mhm.
I instantly thought there's a different way to organize your business if you're making that much money as a net. And it's called an S Corp. S is
Yeah.
in Steph. That's how you can remember it. But there's 4 different kinds of companies.
Mhm.
There's a sole proprietorship, which is just you. And sole proprietorships are always subject to self-employment tax. And so self-employment tax is comprised of Social Security and Medicare. This is a really important tax in the grand scheme of things because that's a social safety net program. It's called FICA.
Mhm.
And FICA is quite literally keeping senior citizens alive right now, especially right now.
Mhm.
Social Security and Medicare is hugely important to the fabric of our society. That's what your self-employment tax is going toward. So if you skip paying self-employment tax, they're going to come for you. Self-employment tax is 15.3% of your net. And that can be a really big hit if you weren't expecting it.
Mhm.
So not only do you owe a bunch of money to the federal income tax, but you also owe a bunch of money to Social Security and Medicare.
Mhm.
And since they are literally, especially during COVID, they're strapped. So
Mhm.
Social Security hasn't had a basic cost of living increase in a few years. I think they had one a couple years ago, but it's been a while. So you have to pay that 15.3% of self-employment tax. If you're employed by somebody, what happens is your company withholds it on your behalf and they pay half of it for you as a benefit to you, and it's a deduction for them. So if I hire you as an employee, your I'm going to pay 7.65% of that for you or whatever it is. And you're going to pay the other half as withholding. And then it's my payroll person's job to add it all up together and send it to the IRS. When you're self-employed, you have to do all that yourself and you have to pay the full 15%. That other 7.5% is deductible and it is on your tax return, but you still have to pony up the whole 15.3% in initially, well, or at the end. You don't want to pay it at the end. That's what I'm getting toward is if you're a sole proprietor, you have to pay that self-employment tax. That's a super important tax. They are going to come for that. They are not going to let you get away with not paying that. They need that money. The second kind of company that you can have is a partnership. And that means that there's more than one person who owns the business. And you guys are going to take that net profit. Let's say it was $100,000 and you're each going to get a percentage of it, whatever your percentage split is. So if it's 50-50, you get 50, they get 50,000. And then you pay self-employment tax on that 50,000.
Hold on a second.
Okay.
So it's interesting. Double taxation is what it sounds like to me. But if you're a sole proprietor and it's $100,000, you pay 15%, you're only paying $15,000 gross to self-employment tax. If you split it between two people, it's 50. Well, I guess it does. The math does work out to the same, doesn't it?
Yeah.
Okay, never mind.
That's okay.
I'm suspicious of double taxation.
Yeah. No, double taxation usually only happens on the corporate level because what's happening is the corporation is getting taxed on their profits and the individuals are getting taxed on their dividends for ownership. But as far, I don't know a lot about C corporations because that's what CPAs do.
Mhm.
So if you are, well, let me get through
Yeah.
the rest of and then we'll get to C corporations. But so if you're in a partnership, you're still paying self-employment tax and you're paying self-employment tax on the net profit, regardless of whether or not you drew anything out. You're getting taxed. Like if you asked me earlier about financial statements.
Mhm.
So I'm going to diverge here for a real quick second. The way that a financial statement works is there's actually two of them. I'm going to talk first about the income statement, which is also called the profit and loss statement. That is your income minus your expenses, and it gives you a net.
Mhm.
If you're in a partnership, a 50-50 partnership, that net number is split between the two owners 50-50. You could be a 70-30 partnership. I know one partnership that was like 47% and 22%, it can be all different.
Mhm.
But when you put all the information into the tax software, it'll do it for you. So you don't necessarily have to come up with all that. But if you're in a partnership, your taxable income is going to get kicked out on a form called a K-1. And because that partnership return is totally separate from your own personal return. So then you take that number from the K-1 and you put it on your personal return. And so if you're in a partnership with your band, but you also teach individually, then you're going to have partnership income getting taxed for self-employment, and you're going to get your freelance teaching stuff taxed for self-employment. And that's what a lot of people's tax returns look like at the level when they start to have somebody else do their taxes for them. This is like, okay, I have so many things going on that I don't even know how this all plays in together. Sole proprietors and partnerships, you're going to pay a lot in self-employment tax. But if you're making more than 60 or 70, let's say $60,000 a year.
Net or gross?
Net.
Okay.
Good question. Net. Yeah. If your profit for the year is like 60, let's say 50,000, just to
Round numbers.
Include a few more people. Yeah, I like round numbers. 50,000. Then it might benefit you to start a company called an S Corp. An S Corp has a lot of the same rules as a big major C Corp, meaning you have stock, you have shareholders, you have to have a board of directors, you have to have an annual meeting, you have to have an earnings meeting, you have to have minutes, you have to have bylaws. It's like all the same corporate laws, but you can only have one owner. And so I've seen a lot of bands organized as S corps. And then what happens with that net profit is it's not subject to self-employment tax. It is a capital gain because you are an investor in your own business. And so you're not necessarily considered an entrepreneur, or you're not considered self-employed. You are an owner of a corporation. And so the one caveat to the S corp is that you have to take payroll. You have to put yourself on payroll. So if you have an S corp and you have a big band and you're making $100,000, you're going to save a lot of money, like thousands and thousands of dollars, by organizing as an S corp and putting yourself on payroll, and then issuing yourself regular paychecks, withholding your Social Security tax, withholding your federal tax, sending it to the IRS every time you pay yourself. And then at the end of the year, if your business has any net profit, you have to pay income tax on that, but you don't have to pay self-employment tax on it. And the break-even point for that, like, having a corporation is kind of expensive. You have to organize it. You have to set it all up. It requires a lot of work. So it really only benefits you if you're netting more than like 50,000 or so. Anything less than that, and it might be more trouble than it's worth. But if you are super profitable year after year after year, and you're regularly profitable, where you could write yourself a paycheck and it wouldn't be an issue, then being an S corp is probably going to save you a ton of money just in self-employment tax.
So let me ask a question on corporations, because that seems great on the tax benefits to start an S corp. I would say a lot of artists that I've seen go the LLC route, and even like major artists. I mean, artists that come through our venue, I would say about half of them. And these, I mean, doesn't mean they're netting, right? So if they're getting paid $100,000 for a show, doesn't mean that's what they're netting, because they have tons of expenses. But they're probably netting more at the end of the year than $100,000. But they're LLCs. So when would you want to choose an LLC over an S corp?
So that is a really great question. This is something that trips a lot of people up. You can be an S corp and an LLC. Yeah. Most people don't know that.
I'm start paying attention to those W-9s when I look at them.
Yeah, exactly. Well, you probably wouldn't know from their W-9 if they're an S corp or not.
Got it.
That's like private information, I think. There might be a box on the new W-9s. I'm not sure, actually. I'll have to check that.
Yeah.
But so an LLC is a legal term. An LLC protects your assets from liability. And this is the best example that I can give. If I am running a business management company and I hire an assistant, and my assistant, I'm on vacation, and my assistant gives advice to someone to sell a bunch of stock, let's say, and they go and they sell their stock, and then that turned out to be really bad advice, and they're mad at me, and they want me to, I don't know, cover the fees or something. Or let's say that somebody has like a big IRS bill and they come to me and they sue me to recoup those damages. When I'm in court, the judge is going to try to figure out if I'm legally liable for those damages and that mistake. And if I have an LLC and it was the LLC that got sued, then it's only the LLC's assets that can be liquidated in order to pay the damages. Okay. But if I don't have an LLC, then they can take my car, my husband's 401k, and potentially even my house in order to pay the damages. So that LLC being a legal term is a super important mindset switch. The IRS does not care if you have an LLC or not. You could have an LTD, you could have a PLLC, you could have an Inc. All they want to know is the business separate from the individual? And I think it's extremely important that everybody have an LLC if they are working with anyone, if they're hiring anyone, if they're having any contracts, they're signing any contracts, and if they're dealing with anything that might be physically dangerous.
Hmm.
Because if somebody falls off stage and they sue, okay, so like you're in a band and your guitar player falls off stage and breaks his leg because for some reason, he sues you to pay for his hospital bills. Do you want those hospital bill money to come out of your wife's 401k?
Right.
That's that's the legal mindset that goes into developing an LLC.
That's a great way to put the LLC thing, because I always ask that question, and I didn't have a good answer for it. When to start an LLC, I mean, kind of maybe similar answer, but it's like I always used to say whenever someone could sue you.
Yeah.
Well, yeah, I guess whenever you work with anyone, because if you have to sign a deal, if you play a live show, and I don't know, you're packing up your gear and accidentally your guitar hits someone on the way out, right?
Yeah.
Instead of you being sued as the individual, now the LLC gets sued. So
Yeah.
it seems like the second you go out in public or work with other people, that's when you should form the LLC. So it's
Yeah.
not based on income.
No, it's not based on income at all. But there is an element of assets to it. So
Mhm.
like if you don't have any assets, if you don't own a home, you don't have a 401k, then you don't really necessarily have anything to protect.
Mhm.
And if you get sued, the judge and you lose, the judge is just going to take whatever they can get from
Mhm.
you. So it's really like the way that I usually tell people is if you're signing a contract, if you're hiring anybody, or if you have assets to protect. And setting up an LLC is super easy. You can just go
Super
to your
easy.
state's website and, I used Rocket Lawyer. It was $40.
Mhm.
People think it's really expensive, but it's not. Even on LegalZoom, it's only $99.
Yeah.
Some notes about an LLC is they're going to ask you who you want your registered agent to be.
Yes.
If you pick a registered agent that is not yourself, you are giving them control over your company. So you'll want to either keep yourself as the registered agent or pick a registered agent that you know for sure you will be able to trust for the rest of time.
Mhm. Yeah, for sure. Um, Speaking of starting LLCs, this is just something I always think of, because I know some people will start an LLC in Florida because of tax reasons or whatever, but they're not really based in Florida.
Yeah.
And it's much cheaper to run an LLC. Like here, the fee is $125 is the filing fee, and like in California, it's $750 to file, and that's
Yeah.
annual. Um, do you know the rules of like what the requirements are to file an LLC in a different state, even though you don't live there?
Yeah. So I'm not a lawyer. I should probably
Yes,
disclaim
this is
all
not
this and
legal
say that
advice.
like this is not legal advice. No, you can
Any of
find
this full podcast says none of this is legal advice or
yeah.
financial advice. This is for
Yeah.
entertainment purposes only. Go hire an expert, and you should
Yeah.
hire an expert whenever you're doing any of this stuff.
And you should hire a local expert
Yes,
because they
people.
know what they're talking about with your local laws. Like in Michigan, it's only $25 to register an LLC.
Wow.
Yeah. Yeah, I just did it yesterday. So, yeah, the deadline was February 15th, but I skated in there. I think I'm okay.
You just made it.
Yeah, so there's an element to real quick, I just want to say one thing. There's an element, oh, I lost my train of thought. Shoot. There was something else I wanted to add. Oh, the corporate veil. So you only want to start an LLC if you can maintain a corporate veil, which means that you are operating the business separately from your personal life. It means you have to have a separate bank account. You have to always use the business's name whenever
Mhm.
you're receiving money. And so, like, you can't intermingle back and forth. If you're not maintaining that corporate veil and you get sued, then the judge could throw the whole LLC out anyway.
Yeah.
And that's in every state.
And that is, so real quick, if you are say an LLC for your artist, as your artist company, you get $1,000 guarantee on a show, and then now you take $400 of that to pay your car payment, your personal car payment.
Right. So what you'll want to do instead is just move it into your personal account first.
Yeah.
And then pay your car payment from it, because then it was a draw, an owner's draw. And then it's just, it's just easy.
Yeah.
But getting back to the state question. So when you file your tax return, you want your resident address to match your driver's license.
Okay.
And that's the state that everything should be based in. If there's ever any questions about what state you live in, they're going to look to your driver's license. and where your social security card is registered to. So whatever your legal mailing address is should be the only state that you really mess with, unless you have a physical space in a spot. So like I had one client that lived in Michigan, but they had a studio in Nashville.
Okay.
And that's great because Tennessee doesn't have income tax either.
Mhm.
So they moved all their business operations to Tennessee because they had a studio there. And so their business was based in Tennessee, and that was great. All their business stuff was not taxed at the state level. But then their driver's licenses were based in Michigan. So their personal tax returns were filed in Michigan. So they paid personal income tax to Michigan.
Got it. Okay. So this all has been awesome. I can probably grill you for 2 or 3 more hours on this stuff. We can probably do an entire weekend seminar on this stuff. Well, yeah, you have
I'd be happy to.
You have amazing resources, right? People should go to
Thank
StephBelcher.com to
you.
learn more. But let me ask this one more thing, because you said when someone is a sole proprietorship, a partnership, you're paying that personal income tax, right? Was that what it was called, or self-employment tax?
Yeah.
What other taxes are there? Because you said the self-employment tax covers Social Security, it covers Medicare, but it doesn't yet cover potentially if there's a state that has state income tax, and federal income tax, right? So what other
Right.
taxes could there be?
Well, those are the only other two, but then there's also sales tax and property tax. So one of the cool things about the US tax code is that we don't have to pay tax on the income that we use to pay more tax. So when you pay your property taxes or your sales tax or your car registration, all of that gets deducted from your tax return, and that's not subjected to income tax. That's what the standard deduction is. And if you have ever itemized your tax return, that's what that was for. So on the itemization sheet, you're listing every single tax you've paid for the whole entire year. And there's like safe harbor numbers because they don't really expect you to figure out like every single dollar you paid on sales tax for the whole year. But for you, for example, Chris, like living in Florida, you're not paying anything in income tax, state income tax. So instead of the state income tax, they would deduct your sales tax, because Florida's sales tax is higher than like Michigan's only 4%. And like in Vegas, it's like 10% or something like that, because Nevada doesn't have a state income tax either. So that all gets taken out of your tax return. So the only taxes that you have to worry about paying in real time are self-employment tax, and that's 15.3% of your net. Federal income tax, which is on a bracket system. It's either 10, 12, 22, 29, I think, 32. I'm not sure about the very top ones. I don't have them memorized. You can look it up. It changes all the time, so sometimes I forget about them. And then at the state level, you have to pay a state income tax if your state's one of the ones that has a state income tax. All of those have to be paid. We live in a pay-as-you-go system. So all of those taxes, federal, state, self-employment, have to be paid when you get paid or by the end of the quarter at the latest. So I don't know when this is going to come out, but it's February 18th right now. All the money that's made from January 1st to March 31st is due in the IRS's, your tax on all that money is due at the IRS on April 15th.
Got it.
And that just happens to be the same day as tax day, but that's when your estimates are due. And then the next one is July 15th. And then they actually made the next one be September 15th, which kind of bugs me because it's not symmetrical, but I digress. And then the last one is due January 15th. So that's when estimates are due. So inside of that spreadsheet that you're going to make to keep track of your gigs and your merch, so the reason that I want you to keep them all separate mostly is because I want you to keep track of your profit margins. That's really important to your business growth. It's really easy to go spend $20,000 on a record and then make $20,000 at a gig and feel like you broke even.
Mm-hmm.
But
Yeah.
imagine if you spent $20,000 on a record, and instead of using that gig money, you worked really hard to get a sync. And that's how you broke even.
Mm-hmm.
Because when you're recording, you're technically creating an asset.
Right.
So I really want you to keep everything separate on these 4 different spreadsheets. Keep track of your profit margins. See which avenues of income are most profitable for you. It's a really easy way to see where you're leaking money. You know, if you did get a big sink, maybe you can use it to float you through on an expensive tour, and that's totally fine. But I want you to know that you're doing it.
Mm-hmm.
Your decisions regarding your money. So actually, I want to back up. This is something that I wanted to say. There's this whole money mindset thing where people feel guilty about the money that they spend.
Mm-hmm.
People come to me all the time. Oh, I bought a really expensive guitar,
Mm-hmm.
or oh, I went out for sushi. And it's like, you don't have to feel guilty about the way that you spend your money.
Yeah.
You just have to be intentional about it.
Mm-hmm.
And if you're not being intentional, if you are flying by the seat of your pants or letting other people make decisions for you, that's going to cause a problem in your soul, right?
Mm-hmm.
So part of the thing that I teach when I'm teaching people how to budget and how to start keeping track of all of this is let go of all of that guilt that you were taught to feel by whoever taught you about money or didn't teach you about money, as the case is a lot of time. Let that all go. Accept who you are, accept what you spend money on. If you want a pair of expensive shoes, that's totally fine. You are allowed to have those expensive shoes. You are entitled to those expensive shoes. You deserve them, but you have to budget for them.
Yep.
You have to know how you're going to pay for them. You know, like, do you want to put them on a credit card and pay interest on them and end up paying 20 or 30% more than they were actually worth? Or do you want to hustle a little bit and get a sink or something
Mm-hmm.
and be able to pay cash for them?
Yeah.
So that mindset part of it's really important. But then once you're keeping track of everything, you have ownership over your process. And it's so much easier to keep track of everything when you're totally comfortable with everything that you're spending.
Yep. Yeah, completely agree. There's this financial expert I follow, Ramit Sethi, and he always talks about this too. As long as you've budgeted for it, whatever your thing is, go all out. Like, don't have
Yeah.
a million different things, but like whatever your one thing is, like if you're really into traveling, then go travel as often as you can. If you want to buy a $8 latte, then go buy your $8 latte instead of making it at home. But whatever your thing is, like don't feel bad about indulging in
Yeah.
that thing. But anyways,
Yeah.
so that's question I'll ask you, and it's a kind of a 2-part question. It's really 2 questions. I'm cheating a little bit,
Sure.
but how is capital gains tax different from the different taxes that you've talked about so far?
Yes. Thanks for bringing me back to that. Yeah. Capital gains is taxed completely separately from income tax. Well, it is subject to income tax, but it's on a different bracket system. So they recently changed, and maybe I'll write a blog about it.
Give you an idea.
Yeah. The capital gains tax rate for 2021 is 15 to 20%.
Okay.
So you won't pay any capital gains tax if your total income is 40,000 or below. So if you,
as an individual,
if you are an investor in a business and your total income is less than 40 grand, if you got paid dividends or you had any kind of income from that investment, you're not going to have to pay any tax on that at all. Okay. It is a hugely favorable tax system, and they do that on purpose. This is like the Warren Buffett way of being rich. Because what he's doing is he's investing all of his money into capital gains and assets. And then when he So you asked about the balance sheet. When you own something, it is an asset that increases your net worth,
Mhm,
but you don't have to pay tax on it until you cash it out.
mhm,
So you can be worth a lot of money, but not necessarily have any cash because you
mhm.
haven't sold it yet. And that's where capital gains comes in. And if you read any of Warren Buffett's books, he talks about that a lot.
Got it. So just like this for easy example. So it sounds like if let's say I bought $1,000 of Bitcoin and I sold it at 2,000 and I made $1,000 capital gains. If I make less than a certain amount of money per year, I would not pay any capital gains on that $1,000.
So I want to say yes, but I'm not 100% certain of how Bitcoin is taxed.
So let's say I buy a index
Let's
fund.
say you bought a rental property.
Sure.
Okay, so you bought a rental
Easier.
property and then you sold it and you only made $1,000 on that rental property
It's a
and you
bad deal.
made super bad deal. Yeah, that that $1,000 of capital gains would not be taxed if your total income is less than 40,000.
Oh, interesting.
Mhm.
I wonder if that's like how some of these people manipulate the tax
Mhm.
code, that their total
100%.
income is always less than 40. Anyway,
Yeah.
so the part two I was going to ask of the this question is, these days, like NFTs is the really, really big thing, right? And artists are, I mean, and this could be simpler. Like, so let's say I write a song, the song starts making a ton of money, and then 20 years down the road, I sell the rights to the songs. Like I sell the copyright of the song.
Yeah.
Is that sale of the copyright? Would that be all capital gains?
I'm pretty sure.
Yeah.
That's actually a really good question. I would say I feel 99% confident that that would be considered the ownership an asset sale. Yeah.
And the thing I'd be curious about is, how do you estimate the gain, right? Because if I write a song and it's not making any money today, I guess, and I did it all my own time, it really costs $0 to make it. Let's say I self-produced it and everything, and then I sell it for $100,000 one day. Would that entire $100,000 be the capital gain? I don't know if you know the answer to that.
Yeah, probably.
Okay.
So, yes, probably. In rental properties, just as an example, or like if
Mhm.
you owned a concert venue, the word is basis.
Mhm.
So you would keep track of how much you spent on the venue, how much you put into the venue for capital improvements,
Mhm.
and then you would take out the amount of depreciation over all the years, and then that would be balanced into um, the basis, and then you would take the sale price, subtract the basis, and that would be the gain. But this is pretty heavy lifting accounting. You would
Yeah, for sure.
if this is the kind of accounting that you need, you're gonna pay $2,500-$3,500 a year for somebody to do this for you, if not that much a month.
Yeah, you should definitely hire someone at that level.
Yeah,
Yeah.
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 And I want to also say to all the listeners, uh, this is an area of the music business where we desperately need people who know what they're talking about,
Yes.
because like business management as it exists in the music business right now, did not exist 10 years ago, because there was only really one way to make a huge amount of money in the music business before Spotify and DistroKid and Kickstarter and Patreon all started coming around. And
Mhm.
that was
Mhm.
to get signed. And if you got signed, you had a business manager that kind of came along with the deal.
Right.
So in the last 10 years, by creating all these like DIY systems for musicians to make money, we've also created a need for business managers and accountants who know what they're talking about,
Yeah.
and finance people. It's very hard to transition accountant majors out of their cushy Deloitte jobs into the music business. But if you're somebody who has made it this far in the podcast and you're like, man, I love this stuff, there is a career for you, and I can maybe coach you through how to get started in that. But it's a very strong need in the music business. Like,
Yes.
there are 3 people in Michigan that I know of that do this, me being one of them.
Right. Wow.
And it's such a small division. I would guess there's probably like 100 people in the whole country that do this, maybe 150.
Yeah, and there's very little content and information about this. I mean, it's really
Yeah.
hard to research, and
Yeah.
most accountants don't know that. That's why I always have musicians complaining. I need someone that
Right.
knows how to do music business.
Yeah. Most accountants don't even know how to talk to musicians.
Yeah, for
It's
sure.
is like a gigantic disconnect, even in the appointment, you know?
Mhm. Would Patreon fall under service?
Yeah.
Yeah.
Yeah. For the most part, you have to be present. You can also sell merch through
Mhm.
Patreon, but it's going to come to you on a 1099. And so, like in the tax world, we're taught that whatever box the 1099 puts your income in, then that's where we have to put it on the tax return.
Mhm.
And that you would get a 1099K from Patreon, which is like online sales. And that basically goes, it could go into the products or the services. It really depends on how your accountant wants to do it and whether
Mhm.
or not you're taking out a lot of expenses out of that. Um, Basically, it all gets blended together on the Schedule C or the partnership return at the end of it. But I want you to keep track of them separately at the beginning for profit margin purposes.
Mhm.
Because when you're creating merch, you need to know what your costs of goods are.
Right.
Otherwise, like if you spend $6,000 on merch and then you sell it all and you look at your spreadsheet and you only made $8,000 on the sale of it all, was it worth it? Because that's
Right.
a really small profit margin and maybe you need to double all your prices.
Mhm.
So that's the kind of the point of keeping it all in the separate spreadsheet that way. But then when you go to put it on the tax return, you're going to have the service part be here, and then you're going to have the cost of goods be here, and it's all going to kind of net out at the end.
Mhm.
So it's more important to keep track of it in your trusty spreadsheet.
Awesome. Well, this all has been amazing, and
Thanks.
I have so many more questions. So
I
I
mean,
could do
yeah, maybe we'll do it. We'll do round two
roll it around too. Well, it'll
another
be
time.
fun to do it for a workshop for the my students. I think that'd be really cool.
That'd be
And
wonderful.
it's a mix of musicians and promoters, and I think that'd be a really fun because I feel like the promoter world is probably also really weird accounting compared to
Yeah.
the rest.
Yeah. I did the books for an agency once,
Hmm.
and that was really interesting because the agent takes deposits on behalf of the artist and then pays themselves out of the deposits after the show happens. But if the show gets canceled, you have to return the
The
deposit
deposit, yeah.
if the band cancels the show. So we had to open a separate checking account and just hold all those deposits.
Hmm.
And so promoters I actually haven't ever done the books for a promoter. It's probably crazy complicated.
Crazy, Wild West.
Yeah. It's funny. I
Nice.
actually worked for a promoter in Chicago and it was in 2008 and it was like a very part-time freelance thing. And he asked me if I knew how to do bookkeeping and I like laughed. I was like, "No, I have no idea." And then the next job I got was the tax job.
That's
And
funny.
I saw him at a festival in Chicago and I was like, "Hey, guess what I'm doing now?" And he was like, "Oh man, I would love that." And then he ended up closing up shop during the recession, but
It's a bummer. Such a
yeah.
bummer. Well, let me ask you a couple quick fun questions as we're wrapping up.
Okay.
So first concert. What's the first concert you've ever been to, or first memorable concert?
Hmm. The Jets. Do you remember the Jets?
No, I don't remember the Jets.
Yeah, they were like a family band from Hawaii, I think.
Oh, cool.
Yeah, but after that, I would say Dave Matthews Band. I got
That's a good
really
one.
into Dave Matthews Band in
Nice.
high school. Yeah.
First album you've ever bought with your own money.
Oh man. That was probably like Reba McEntire
Okay. Very
or
cool.
I was really I was probably like 9. Oh man. Yeah, I'm gonna just stick with Reba McEntire.
Okay. And this next one, you don't have to give one for all three. You can choose if you want to do one or all three of them. But what is the books, podcasts, or documentaries that you share the most or recommend the most?
Hmm. So the book that I recommend the most is Rockonomics by Alan Kruger. He was the economic advisor for the White House during the recession and did a lot of work on labor costs and minimum wage, but he was personally involved with the music business and he did this amazing study about the black market in ticketing.
Mm,
And he helped to create the adaptive ticketing pricing that we see now,
mm.
where if you log into Ticketmaster, the costs are going up or down based on how many people are
Platinum.
interested in it.
I
Yeah.
hate platinum. I mean,
Yeah.
as a promoter, I love it, but I hate it as a fan.
Yes, exactly. And, basically the idea that he revolutionized was that scalpers wouldn't exist if artists priced their tickets properly.
Mhm,
So scalpers are stealing money from artists by, if you priced your ticket at $100
mhm.
and a scalper buys it for 100 and sells it for 400, you should have priced it at 400.
Yeah,
You're losing $300.
yeah. The scalpers make more
And
money on that ticket than the artist
right, exactly.
or the venue or the promoter.
Yeah, exactly. And so that was kind of his platform. So he did all this research on Polestar data
Mhm,
and wrote this big book called Rockonomics. And I just absolutely loved him. And he was a mentor to me for a while. And then sadly, he took his own life, which
oh,
was very devastating for a lot of us. And I miss him very much.
mhm.
So also, if you are struggling, if you have suicidal thoughts, if you are, I'm sorry, am I even allowed to say that on a podcast? Are
Go
we going
for
to
it.
get
Yes.
flagged now?
I don't know. Are we?
I don't know. I hope not.
These
But if
days,
you're
yeah.
struggling, feel free to reach out. I'm here to
Yeah.
chat. And
Yeah.
it's your life is precious and you are a gift to the world. And
Yep.
I miss him every day. So Rockonomics. And then I always recommend your podcast to people, and
Oh,
especially
thank
people
you.
who are gigging. Yeah. Yeah, and then Ari Herstand's too, the new music business. And then I also, being a female in the music business, a woman in the music business, I've found sometimes, sometimes I gravitate I toward men, sometimes I gravitate toward women. But there's one woman that I love. Her name is Gabby Bernstein. She has an amazing podcast called Dear Gabby, and it focuses a lot on spirituality and mental health, and kind of like she wrote a book called The Universe Has Your Back, and it's about um, trusting that everything is happening exactly the way that it's supposed to. So I recommend her a lot too. And then if the last one was movies, I don't ever watch movies.
I'm actually writing a note. So thank you for mentioning that on the mental health side. So I'm gonna
Oh yeah.
share a link. Also, reach out to Steph or reach out to me too if you need someone to talk to. There's also a really great organization that focuses on the music industry and understands how the music industry works. It's called Backline.care. So check them out too. And I've done a podcast with one of the founders of that organization. So definitely, yeah, it's sad and how many of those stories are out there in our industry. And
Yeah.
everyone is struggling with something that we have absolutely no idea about, right? And there's stories of Robin Williams. Like his last show he did was actually one of his last shows. What it was at the Barbara B. Mann Center in Fort Myers, Florida, and you would never know that he was struggling with something. Like
Mm.
you talk to the security guard, to the maintenance person, to the person wiping the floors at the end of the night. Like he would talk to everyone and found such joy talking to people, and then he takes his own life, right? And
Mm.
it's like
It's devastating.
just because someone seems like they're excited and happy like all the time, like
Yeah.
really listen to people, right? Really be
Hmm.
present. Like if someone is taking the time to talk to you, take time to talk to them back because they might really need that.
Hmm.
Yeah, they might be the ones doing the talking the whole time, but try to get into them as well. Like talk,
Hmm.
like really listen to them. But
Yeah, and keep making music.
yes,
Music really a lot of times heals people and saves people. I like to think that music finds people exactly when they need it.
yep,
And if you don't make your music, nobody can hear it.
mhm,
And you never know when your story of hope and resilience might pull somebody out of a really dark place.
mhm,
So, it I I like to, if that song feels really big and heavy and it makes you cry, go with that. That's
mhm,
probably a good sign.
yep.
And it might, really help somebody else too. So,
And I think it was Jeremy Scholar. I think that's his name. He was on the show. He's a really big producer. One important message he shared is don't get precious, right? If you have that
Yeah.
song that makes you cry and makes you feel something, there's someone in the world that needs to hear it. And don't
Yeah.
wait for it to be perfect or wait for it to be whatever, have the right marketing budget or whatever it is, because at the end of the day, in the words of Gary Vee, it's the market decides if it's good or not. You don't
Mhm.
decide if it's good or not. You just decide if you put it out there or not. So if you have something that moves you, it'll probably move someone else.
Yeah. Yeah. Gabby Bernstein always says, release the outcome.
Yeah.
The outcome is the universe's responsibility. Your responsibility is to move your energy from inside your body to outside your body and to give it to the universe and let the universe do whatever it needs to do with it. So release that outcome. You never know what's going to happen. You literally never know. Your responsibility is to move the energy from inside your body to outside your body and release the outcome.
I feel like I have a bunch of quotes here at the end, but one of my favorite like quotes from my entire that I've used as my signature forever, from Bono. He said, "Music can change the world because it can change people."
Yeah, I love that.
So we went.
One great rock show can change the world. That was Jack Black in School of Rock.
Hey, there you go. I love that movie.
Yeah, me too.
Anyways, we went deep here at the end. So,
Yeah.
and on a lighter note, so final two questions. What is something you're currently really excited about? So this could be a TV show, it could be something about the music industry, it could be a new band, it could be a new hobby. So for me, for example, is I just started doing jujitsu, and
Oh, yeah.
I am really excited about that. Really, really pumped with the people I do it with, and I dream about it, I think about it, and I guess the other thing is, I finally got my wife to watch Ted Lasso, and she's loving it.
Yay. I just took off my Ted Lasso jersey. I was
Oh,
like,
nice.
I can't wear this on the podcast, so I took it off. Oh
Oh, that'd been
man.
awesome.
That's my favorite show. I
I
like
love
to
that
think
show.
of myself as the Ted Lasso of the music business.
Oh, nice.
Yeah. I am excited. I mean, this is a little bit different than maybe what you were looking for, but I'm excited that I'm weaning my baby from nursing him because he's 15 months old and I really want my body back. So that process has started and that's exciting. So I'm like super excited to get my body back. I'm officially done having babies. I have a 10-year-old, a 6-year-old, and now he's 15 months.
Wow.
And so I feel really excited to be moving into that phase of my life where like I know I am a mom and I am done. And that is like, it's a nice little bookend. So having my body back, running, I'm excited about summer.
Mhm.
I'm excited that my kids don't have to wear masks at school on
Yes.
Monday or Tuesday when they go back. That's like amazing to me. We've made it this far, knock on wood, without testing positive.
Oh, awesome.
So, yeah. So now I'm kind of like, oh boy, here we go. But at the same time, I'm like ready to get back to normal.
Mhm.
I have tickets to see the band Joseph. Do you know them? The
Mm-mm.
trio of sisters.
No.
They are
No.
absolutely incredible. It's an older sister named Natalie and then twins named Megan and Allie. And they have, sister harmonies, family harmonies. They're absolutely stunning. So I have tickets to see them. I'm taking my 10-year-old. It's at the Arc in Ann Arbor,
Oh,
which
cool.
is an
That's a cool venue.
amazing venue.
Yeah,
Yeah,
it's like a
yeah, yeah.
smaller venue, right? 200, 300 cap.
Yeah, I think it's 4. I think it's
Okay.
I think it's 4, but yeah, I'm going to see them there and
Very
that's
cool.
yeah. Yeah, I have a lot to be excited about right
Yeah,
now.
that's
Yeah.
awesome. It's great to hear. And then
Yeah.
the question I ask everyone at the end is, what's your definition of making it?
Ooh. I knew this was coming, but I still don't have an answer for it. No, I do. My definition of making it is helping one person a day. Helping one person a day. If I can deeply touch the life of one individual a day, I will have made it that day. That's really, I think, when my dad died, it kind of put a lot of things in perspective for me about end of life and big goals and everything. And so I really tend to live in the moment day to day. I've done a lot of meditation, been to a lot of therapy. I try really hard not to think too far in the future. So my my goals are usually pretty short term. And you know, who am I going to help tomorrow? How am I going to change somebody's life tomorrow? That's how I would make it. Yeah. I don't know if that's a good answer or not, but
It's awesome. So usually I end the podcast right at the end of it, of that. That's that an answer for everyone. But I just wanted to throw in, I think you've probably changed a lot of people's perspectives on finance and how they look at their business today through this podcast. So I feel like once this comes out, you're going to help a lot of people. I feel like you've helped
I hope
me.
so.
So thanks so
Ah,
much for what it is that you do for our crazy industry.
yeah. Thank you too.
Live the life you love.